We do know that the market is down 18 points today, but in general, it's reported that foreign investors are starting to trickle back with an increase of 6% in the month of October.
Yes, basically, foreigners have been increasing their participation over the last 2 months, actually, quarter to date, October and a bit of November. But the participation seems like it's also slowly reducing. It started quarter four on a very high note, and we saw the market responding. Clearly, the NSE stock exchange is moved by foreign investors more than local institutional or local retail investors who are still pessimistic about what is happening in the market. So they have been participating. Whether they will continue to sustain the market up to the end of the year, that's something that we have to wait and see.
I mean, obviously the foreign investors love the blue chip stocks, they love Safaricom, and to a large extent they are the drivers of liquidity. We know it's the end of the year, people are going to be looking for money for the festive season, so we're likely to see people cashing in their shares. How badly do you think the NSE will be impacted?
The problem that the NSE has had this year is more on the demand side. It has really had a demand problem throughout most of the year. The demand has been lower compared to the previous years. So you find as we go towards the end of the year, as you said, people who want money for Christmas. I don't think really retail sellers and institutional investors are going to start selling because we've reached Christmas. Most of them already moved out of the market, especially the retail investors. They're more in cash and in fixed deposits, same as the institutions. So really where we are, it's basically a level that can be sustained until the end of the year, maybe with marginal movements upwards and downwards, but we'll oscillate around the 3,200, 3,400 mark.
They're in cash and they're in fixed income, but where's the benefit there? Because interest rates are very, very high and the yields are also rising. So the issue is that servicing some of that debt is becoming too expensive.
Yes, but let me take an example from a retail investor or from an institutional investor's point of view. I have cash. The assets available to me, which are your equities, your money market, and your fixed income. Your fixed income gets disqualified because you're in a market where interest rates are going up. So you can't really go long term on the fixed income. On the short term, economic outlook is not that good. IMF, World Bank, whoever does estimates has been downgrading. So again, fundamentally, the equities market might not be a good place to go. So you are stuck with your money market. On a general deposit for 90 days in a commercial bank, you can get anything between 17 and 20%. With inflation at 18%, you're already making a real return of 2% if you get a deposit at 20%. So you'll find people are now more looking at just preserving capital than really growing it at this stage in time.
The Kenyan shilling at 93 shillings 55 cents, a much improved picture. Obviously, a lot of the measures taken at the monetary policy level are starting to kick in, but for how long?
Yeah, that's a question that we also have in our minds. How long will they flood the market with dollars? How long will they keep the optimism that they are in control of the shilling? How long will we play the IMF card that they're going to give us this money, we've applied for this money? So you find fundamentally the factors that are pulling down the shilling or that pulled down the shilling are still in place. The macroeconomic vulnerabilities that the country has are still in place. So it's basically a period that we've gone through where good news, a bit of certainty and confidence in the monetary authorities in handling the shilling crisis is what has helped the shilling. But fundamentally, we are still in a mess.
A company that I think is in a mess, to use your words, Total Kenya. I mean, a 67% plunge in their profits for the third quarter, or rather for the 9 months of 2011. It's not a good showing, but it's not really anything to do with them. It's to do with the macro picture, price caps and those sorts of issues.
Yes, exactly what I was saying. As in, we have reached a point in time, you'll find results that will come in from non-banking sector and non-agricultural sector will not be looking that good. Because these are the sectors, your manufacturing sector, your energy sector, your construction sector, your telecom sector, are the sectors that have really borne the brunt of high interest rates and high inflation. Because basically the banking sector, they're playing with the margin right now. Deposit rates are still at 2-3%, lending rates at 27-28%. That's the sector to go into. But input costs, cost of doing business in the energy sector, construction sector, manufacturing sector has soared, and they've not been able to effectively push that cost to the consumer, especially for the energy sector where prices are being kept. So we will see more of those results from companies in these sectors.
Yeah, okay. Talk to us about EABL, because we've been watching that counter for the longest time. We wanted to know if they were going to do a rights issue. How are they going to deal with that whole issue of sorting out the stake in Tanzania? And now it seems as though they've abandoned that plan.
Yeah, basically they looked at the rights issue, and if you look at the rights issue at the current time like this, who is really going to come and pick up your rights? People are looking at emerging market economies, sub-Saharan Africa economies not performing well in the next year or so, year and a half, especially Kenya. So when consumption reduces, you're also saying, okay, there will be a bit of impact also on your revenues in terms of alcohol usage and all the other things that you sell. So marketing a rights issue in a bear market, which has basically prolonged the whole year, will not be a smart move, especially looking at the results of the IPOs that have come. So for them, it's really looking at another financing option. Bonds will not really work for them. Interest rates are ridiculously high right now. A commercial paper, you can't use a commercial paper to finance a long-term project. So they are in a fix.